Hey, good morning, traders. This is Rick with Hit and Run Candlesticks and our morning video blog. Today is Wednesday, September 16, 2020. Okay, so yesterday we gapped up a little bit on the SPY here, and we closed right at, see, I've had a blue line about this 342 area right in here. And this is what I think the bulls really need to get over up here like this. And then do a little pullback and testing in here, something like that. A little bit of a test, prove it can stay there, and then we may see some bullishness up. Now that's what I'm looking for. The market may charge, just keep charging right on up here. It does need to get through that though, and of course, if we break down below these lows, that could spell a little bit of trouble for the market. Remember today, the FOMC minutes and information will be out, so that could shake the market one way or the other. A lot of times what I see is maybe the market shakes a little bit and then it really goes back to where it was. So you might get these little intraday swings and then back to nothing. FNGU, the big tech, closed very well yesterday. It did close over our first little line right here, over this big candle. We closed up over that 178.90 up to, what was it, 186. I think the next hurdle that FNGU is going to have is about, well, let's just call it an even 200. I think that will be the next big hurdle. Remember here, we've been up 3 days, well, 2 days, I guess. We won't count that day. So 1, 2, let's see what happens this third day. We might see a little consolidation once we reach this level, a little consolidation. And actually, that would not be bad providing we hold up here. Because then what we would have is a low to a high to a higher low. Now, this being the first high, we would have a breakout of this high right there. And then if we came back and tested that with success and the bulls stepped in and started rocking it, then we could really get through that 200 and up a little higher. This is a bullish scenario. Of course, if the sellers take charge and we start back down, well, that's going to cause a little concern in the market. VXX held up pretty well yesterday. I see pre-market this morning we're down a little bit, flirting with those lows is what we're doing. If it matters to you, it might not matter to you. We're 2 pennies from a tweezer bottom on VXX. In terms of candlestickers out there, pay attention to that. That in itself does not mean anything. What it means to a candlesticker is we're going to keep our eyes on this, and then if we start to see follow through, that's what we'll look at to trading. So by itself, the only thing it means is that, hey, we better keep an eye on that. It's one of those candlestick patterns that, which like all candlestick patterns, requires confirmation, requires follow through. But it is one of those, like a bullish engulf maybe. You know, you're flipping through charts, you see that bullish engulf. Oh, hey, I better pay attention to that. But then you're going to wait for follow through. This is the same thing. You're flipping through charts, you're looking at them. Oh, hey, we have a tweezer bottom down here. I think I'll keep an eye on that. And if we start to break out, that would be a clue to possibly start buying. Okay, so let's take a look at some trade ideas now. Alrighty. Maybe first today, let me change this up just a little bit. Let me change this up just a tad. Yesterday, let's talk about the stocks I closed out. Yesterday, I closed out my last bit of NIO for a 15.25%. Just staying with the road to wealth rules of taking profits into strength, sticking with those that base hit logic to increase the account. It seems to work for us. Maybe it'll work for you. Maybe it'll help you. Maybe not. But it does seem to work for us. It has grown the road to wealth account quite well, and we're going to stick with that same old plan. We also sold our DOW for 11.5% up here, and DOW still looks like it has more to go, but sticking with our road to wealth rules and our base hit ideas, we went ahead and took those profits. One reason I did all that is the market is a little bit, well, screwy. And to put it in one word, I think the market's a little bit screwy right now, and I would rather err on the profitable side rather than hold out for greed and get smashed, which happens way too many times. We also sold our Coke. We got rid of our Coke. That was, what was that? 8.45%. We got rid of our Coke right here just in case we start losing money on it. Now, if Coke comes back down to this trend line, we're going to look at buying it yet again. Let's look at this. So we come down here. If Coke comes down to that trend line, like I say, we're gonna look at shopping for it again. Another one that we got rid of yesterday, was our, whoops, that's not it, PIN. We had bought some PIN and we closed that out for a nice little 16.9% trade. Now that could come back, and if it does, we'll take a look at buying it again. But once again, based on our Road to Wealth rules, which, if anyone has been watching it or paying attention to the Road to Wealth, it has grown handsomely, and we'll just stick with those trades. All right, now let's take a look at some trade ideas we're adding to our watch list. I've got a few shorts and longs mixed in there. A short, CWH, let's put a line up right here. There we go. CWH, we have a top, and you can see that we came up here and failed. I'm going to go ahead and drop this down like that. We've got a little downhill slide. Big bearish engulf yesterday on some pretty big volume. So on weakness, it looks like we may be headed to about 2260 down here on weakness. So possibly an inside day short, or short when it starts moving below yesterday's candle. Oh, excuse me. We'll put this on our watch list, and we will let our number one trading tool, the live trading alert scanner, point this out to us when it starts to happen. Another one is DRI. Now this, I think, was on the watch list the other day, and I want to point to a chart pattern here. I think it's pretty cool. This whole up and pullback is my favorite kind of chart pattern, and when it's up and it pulls back into what we call the 3/8 trap, and that's where this is in right now, that 3/8 trap. So here we move up, and then see, let's not worry about every little stinking move of the candles. Okay, look at the chart pattern. That's what we have right there, and then all of a sudden we have a day that says, all right, we better get aboard. Well, if you're not aboard, that's okay. Here, this candle popped up. When we start doing breakouts, see this right here, this is a high. When we start doing breakouts, that's a sign that the buyers intend, doesn't guarantee they will, but it's a sign they intend to take this higher. And I honestly don't see any reason why. Let's put that right in there. There we go. I don't see any reason why this can't move up another 10 or possibly 20% toward $110. So $100, I think, is relatively easy, and then maybe 110 with some follow through. PYPL is setting up for a short. Now this is one of our blue ice failures here. If I put, let's see here. So here's the 50-day simple moving average, the blue line. We have been rallying up. You can see the trend indicator has turned red, suggesting that the sellers are taking control. We have a chart pattern here that suggests we start seeing weakness, we start moving down, and 155 and a quarter. This represents our what we call our deuces. This is the 200 simple, and then our what we call our dotted deuce. That's down in this area right here, and that's where I'm looking for this to come down to. I think I'll just leave this chart up for now. TSM. TSM had a fantastic day yesterday, and what I'm looking for there is an inside day. I don't want to pay too high for it. I just really don't want to do that. So really what I would like is for TSM to move back a little bit like this. I'd like that. Now, if I miss it and I can't get it in here for whatever reason, or maybe it just doesn't, maybe it just really starts taking off, that's all right. We'll let it come up and we'll let it come back and test, and then it'll be set up. Let's see here. There you go. It'll be set up again for the type of chart pattern we like, where it rallies up, it pulls back, and then buyers start stepping in like that. So we'll keep an eye on TSM. LYV. Look how LYV right here has built a little support. We popped up, and you can see it started coming down a little bit, holding support. Day before yesterday, kind of broke out. Now, I don't know, some people might put their line up here. I'm going to stick my line right in here. Grab those candles, grab these candles, and I'm looking at the bodies, not the highs. And then we broke out. Like I say, some people might put it up high. If you do, okay. Bottom line, follow price action. Here we broke out day before yesterday. Yesterday held up quite well. So right now I'm looking for a buy area, something like that, right in there for LYV. And then as far as a target goes, let's see here. We could get up here. There's about 20%. Man, that puts us, well, let's move it down just a little bit to $68 to this low right over here on January 30. And that puts you up somewhere near, somewhere between 16 and 20% on this LYV. FSM. This is set up for a doji continuation pattern. Here's your big bullish candle. Here's your doji here. So what would be nice to see is that stock open up here and start moving up and end up today something like that. Wouldn't that be cool? And somewhere in here, I would suggest, for me anyway, this is what I'm going to be looking for an entry somewhere in this area like that. And then it sure would be nice if it closed up. Now, I can't predict the future. I can't do that at all. We just have the first part of a doji continuation candle. I certainly can't make that candle happen. And like I said, I certainly can't predict it. But that's what a doji continuation would look like. And that's what we're shooting for on SFM. BBBY, Best Buy, looking a bit like a short here. Gap up, just a hangman up here. So far we've had nothing but follow through. Here's the 50-day simple moving average, this blue line. So I'm kind of thinking we might want to come down and test that 100 area or about that 50-day simple. Weakness from there could drop it down to about 89.50. Now it's not going to go in a straight line for sure. And if it moves down, I suspect buyers are going to step in around the 50, bounce it up, and then maybe we see follow through to the downside. Now, of course, if we start moving above those highs, say above 110, all bets are off for the short. But we will keep that on our trade list. Ally, ALLY, ended up with a little doji yesterday. We've got 3 days up, a little doji yesterday. Let's throw the buy box in here, and I'm just going to wrap it right around that area. So I'll look at a buy somewhere in that 24.80 area, and I see targets between 280, 28.30, and we'll call it $30 up there for Alley. Coles, we ended up with another doji yesterday, and then a big bullish candle the previous day. Again, we're set up for that possible doji continuation pattern. Should be nice if that's what happens, but you certainly can't count on it. But what I'm going to do is put a buy box in here like that, and then we'll look to be a buyer somewhere in this area, or just a slight little breakout with a target of about 28.70 or about 20-25% on the stock trade. Last one I have here is E-Trade. E-Trade doesn't look like it's doing so well. A little bit toppy, little toppy signs moving in there. Then we gap down, and looks like we have just a little bear flag setting up here. So we start seeing a little weakness. This represents, again, our 200 and our dotted deuce moving averages. This blue ice failure is what's setting up. So we'll watch for weakness on that, and then head down. And of course, if that starts to move to the upside, and I would say above 53.95, above this candle here, if price can get up there, then all bets are off for the short trade. In fact, it may turn to a long trade. Alrighty, that was the trade ideas, a bit on the market, and some trading that we close. Oh, yeah. I forgot to mention, I'm almost all cash yesterday. I did yesterday buy a little of that VXX, and I held it overnight. Currently, that's the only position I have on. I'm going to, we'll see what happens today. We'll see what happens with the FOMC meeting, how that turns out. Can't say I'm going to keep it today. Can't say I'm going to sell it today. What I'm going to be watching is the SPY. How is it going to act, and are we going to get over this 342? And I'll be watching the FNGU chart to see if big tech can continue to lead us up. And of course, if it can, then I'm likely to get rid of that VXX. So, all right, there's a video blog. Again, this was Rick with Hit Run Candlesticks. Thank you very much, traders, and I hope to see you in the trading room.